It's 9:30 in the morning. The stock market just opened, and somewhere in New Jersey, a company is losing $10 million a minute, not because of a crash, not because of a hacker, because of one server. One server nobody remembered to update. This is the most expensive software deployment in history, and the 45 minutes that erased a 17-year-old company. The company was Knight Capital. In 2012, you'd probably never heard of them, but your money had. Knight was one of the biggest trading firms in America, reportedly handling around 1 in 6 shares traded on the New York Stock Exchange. Its trading ran through a system called SMARS. Think of it as a mailroom. Big order in, chopped into small orders, fired into the market. Simple, reliable, but deep inside SMARS, something was sleeping. In the summer of 2012, the New York Stock Exchange launched a new trading program, going live August 1st. Knight had about a month to update SMARS for it. New code was written, and in the last days of July, engineers began installing it by hand on the 8 servers that ran SMARS. 7 went fine, the 8th got missed. No error, no alarm, no checklist caught it. Nobody knew. Now about that sleeping thing. Years earlier, SMARS had a feature called PowerPeg, an old order routing function Knight stopped using back in 2003. And here's the part that should make every engineer's eye twitch. They never deleted it. The dead code just sat there in production for nearly a decade. Switched off. Harmless. As long as nothing ever turned it back on. And this is where one small decision becomes a $440 million mistake. The new code needed an on switch, a flag, a simple yes or no marker attached to orders. Instead of creating a fresh one, the developers reused the old flag, the one that used to activate PowerPeg. On 7 servers, that flag now meant new program. On the forgotten 8th, it still meant wake the zombie. August 1st, 8:01 a.m., the market isn't even open, and Knight's systems quietly send 97 automated emails to staff, each one flagging an error referencing PowerPeg. The warnings were sitting in inboxes before a single dollar was lost. But they weren't designed as alarms. Nobody was assigned to read them. So nobody did. 9:30 a.m., the opening bell. Orders flood in, tagged with the new flag. 7 servers handle them perfectly. The 8th reads that flag and does exactly what it was built to do in 2003. It wakes up PowerPeg, and PowerPeg starts trading with one catastrophic problem. It was supposed to count, send an order, register the fill, stop when done. But Knight had moved that counting logic years earlier and never retested the old code. The zombie couldn't count, so it never stopped. Within minutes, the forgotten server is machine gunning orders into the live market. Millions of them, buying high, selling low, at computer speed, across 154 different stocks. On trading floors, humans watch prices twitch in ways prices shouldn't twitch. Inside Knight, dashboards light up. And on the other side of every one of those trades, someone else is quietly collecting Knight's money. Knight's engineers noticed the problem within minutes. They were fast. They were smart. And under crushing pressure, they made the obvious diagnosis. It must be the new code. It's the only thing that changed. Right? So they rolled it back. They removed the new code from the 7 servers where it was working perfectly. Stop and appreciate what just happened. 7 healthy servers were now running the old software, where that flag meant only one thing: PowerPeg. Knight didn't kill the zombie. Knight cloned it 7 more times. The fix was the fire, and why not just pull the plug? There was no plug. No documented kill switch for its own trading. Shutting down blind meant abandoning millions in live customer orders. So for 45 minutes, one of Wall Street's biggest firms wrestled its own machine. By 10:15 a.m., it was over. The damage report reads like a typo. In 45 minutes, Knight's systems executed over 4 million trades, nearly 400 million shares. The firm was accidentally holding billions in stock it never meant to own, roughly $3.5 billion long, over $3 billion short. Knight begged the exchanges to cancel the trades. The answer mostly was no. Regulators reversed trades in just 6 stocks. Everything else, Knight owned. Knight had to sell it all back into a market that could smell the desperation. The final bill, about $440 million, gone in 45 minutes. For perspective, Knight's profit for the entire previous year was around $115 million. This was, by most measures, not ideal. 4 years of earnings, vaporized before most employees finished their first coffee. Within a day, reports said Knight's stock had collapsed by more than 60%, and the market was openly asking whether the firm would survive the week. It didn't, not as an independent company. Days later, Knight accepted a $400 million rescue that handed investors control of most of the firm. Within a year, it was merged into a rival. 17 years of business, undone by one skipped copy-paste. The regulators weren't done. In 2013, the SEC fined Knight $12 million for failing to build safeguards around its own market access. 12 million sounds almost cute next to 440. But that report answered the question you've been holding since the beginning. How does a company miss 97 warnings? The answer is boring, and that's exactly why it's terrifying. Those emails weren't ignored by lazy people. They were ignored by a system that never defined them as urgent. No alert level, no owner, no process. Every safeguard Knight lacked was cheap. A deployment checklist, an automated install, a kill switch, deleting dead code. Each one on any normal day feels like paperwork. And that's the real lesson. The reason engineers still tell this story like a campfire ghost story. Knight wasn't destroyed by complexity. It was destroyed by leftovers. Old code nobody deleted. An old flag somebody recycled. Every shortcut was reasonable on the day it was taken. The bill just arrived 9 years later, all at once, with interest. So tonight, think about the systems you trust. Your bank, your airline, the app holding your savings. Somewhere inside each of them right now, there is almost certainly a forgotten server. A sleeping function from 2003. A warning email nobody is assigned to read. 97 of them, maybe. It's not a question of whether the zombie is in the basement, only whether anyone remembers it's there. Because at 9:29 that morning, Knight Capital was one of the most sophisticated trading firms on Earth. At 9:30, it was losing $10 million a minute. The difference wasn't a hacker. It wasn't a crash. It was one server still living in the past, patiently waiting for someone to say its name.